So, Vitalik Buterin recently made some pretty intriguing comments about these ETH treasury firms, right? He's backing them because they, well, broaden the token's exposure to a more diverse set of investors.
Exactly. Yeah, it's like companies holding Ether in treasury firms give people more options, which is kind of a win for overall adoption, isn't it?
Absolutely. And he mentioned that these firms are doing a service, by not just holding the token, but by offering different ways for people with various financial backgrounds to get involved.
But here's where it gets interesting. Vitalik also warned about over-leverage. He's like, hey, if this turns into an over-leveraged game, it could really backfire.
Yeah, exactly. Picture it like you have this house of cards. If ETH's price drops too much, those forced liquidations, they might cascade and, well, drive the price down further.
True. And that, in turn, could hurt not just the investors, but the credibility of ETH itself. It's kind of a big red flag, even though the treasury route is widening access.
Right, and he put it in perspective by saying that if in a few years ETH were to collapse because of these treasury actions, it'd be due to this over-leveraging issue.
Yeah, totally. I hear you, but don't you think that the discipline among ETH investors might, counterbalance that risk a bit? Vitalik even mentioned that these aren't Duke One followers, hinting at the reckless practices we saw with Terra.
True. And that's a good point. Vitalik seems confident that the community can, steer clear of that worst case scenario. But still, the system does carry risk if the leverage gets too high.
It's like walking a tightrope. On one hand, you've got exposure and growth. On the other, you have that ever-present risk of a chain reaction if ETH's price gets bruised.
Exactly. And speaking of exposure, the numbers are pretty steep. Treasury firms now hold nearly $12 billion in ETH, with companies like BitMine and SharpLink Gaming.
Yeah, I saw that. Those figures are wild, and they really show how mainstream crypto investment is becoming. But it does make me wonder about the regulatory landscape. Like, can we expect proper oversight to keep these risks in check?
That's a valid concern. While Vitalik's backing shows he sees the potential, he's also sounding a cautionary note. It's almost like, proceed but be careful.
Yeah, right. And isn't it interesting how this whole strategy has helped ETH make a kind of comeback? Prices rallied significantly after a rough patch earlier in the year.
Yeah, it's kind of like a phoenix rising from the ashes. With treasury firms fueling a wider interest in Ethereum, it's getting the kind of momentum that's allowed it to close gaps with other major tokens.
Exactly. Well, if nothing else, Vitalik's insights remind us that innovation in crypto, while exciting, can be a double-edged sword. Keeping an eye on risks is just as crucial as embracing new opportunities.
Totally agree. It's like a balancing act, expanding access and utility, while not tipping so far into leverage that it all comes crashing down.
Yeah, absolutely. Fascinating stuff, and definitely something we should all keep an eye on as the market evolves.
For sure. Vitalik's balanced perspective really underscores both the promise and the perils in the evolving crypto space. Thanks for diving into this with me.